G'day traders, I'm Greg McKenna. Welcome to Markets Morning. It is the 11th of December 2018. Not long now till Christmas, but still plenty of volatility in the markets. No holidays for us yet. Another big night last night. We had stocks go over the precipice, went down through 2,600, but somehow the buyers emerged in the 80s on 2,500, and the S&P got chased back. That saw the NASDAQ rally, that saw the Dow rally. A big part of, I think, what happened last night was that the court case that Qualcomm won over Apple got conflated with being part of the trade war and the Huawei thing and all that kind of stuff. That was a mistake, I think, and when cooler heads kind of thought about it, when Apple then filed a counterclaim, when people realised that the Chinese and the Americans are trying really hard to keep these two things separate, at the moment at least anyway, you know, and then Bloomberg had a story about soybeans, you know, between 5 and 8 million tons being purchased, all that kind of stuff. It all kind of fits together into the narrative that the Americans and the Chinese are still trying to work together on this deal, or at least the truce that President Xi and President Trump have agreed. And so I think that, for me, is the overriding narrative we need to keep an eye of. And speaking of narratives, have a look at Markets Morning, the written piece today, because I've talked about narratives. It's been a little bit of a hobby horse. There's so much BS that floats through Twitter. There's so much slant that journos are now putting on their articles that it's wrong for me to say that there's a lot of journos who want to move markets, but I'd be wrong to say there aren't journos who want to move markets. And so that, plus all the BS headlines and all that kind of stuff, plus the fact that if I'm on TV, I should be asked, what is your position? Right? So someone will come out and say, oh, I think the US dollar's going to heck. Well, if that person is mega short the US dollar, that should be disclosed. You know, when we have a fund manager or some other pundit or some, you know, trader or whoever, they should be forced to disclose so you can at least tell where they're coming from. You know, it's just hopeless that they're not. I've only got a few positions on at the moment. I'm short S&Ps, I'm short Aussie, I'm short Aussie yen, and I'm short Kiwi. They're the only positions, just looking at the screen down here, they're the only ones I've got on at the moment. I thought Euro was going to rally harder yesterday, so I'm not short it, or not short more of it. I didn't think sterling was going to fall out of bed, so I left my desk last night to go to the gym and didn't put the sell stop. So I missed, you know, the 165 points. My partners will be giving me an uppercut, I'm sure, when they watch this video. Anyway, so that's what I think we need to be doing, and that's why when I launch the subscription service, I'll be putting targets and thoughts at the back of the morning note. It won't update every day, but it'll just be there at the bottom. So it's going to be web-based, so I'll be able to just whack it at the bottom just to give you a feel for what I am, so you can tell where my narrative's coming from. And I think you can anyway. Anyway, into the market. So we had a big bounce in the S&P 500, a big bounce in the NASDAQ. Everything finished in the green. That means that we haven't closed below the lows on a day close basis. That, as you know, is more important than just a break. Now, you know, with oil, we saw 3 times in that 7 or 8 week downtrend, hold, break, and then crash. Hold, break, and then crash. So there is a risk. And that's why I say, remember I talked about the trend lines? You can go with the break, small position if it's not at the end of the day. Small position, not necessarily a stop and reverse, but a stop at a risk level that you're happy to take. So, for example, today, you know, a 25.95, a break, 25.83 is a low, gets back above 26.05, that'll do. I've lost 10 points, that'll do me. That kind of thing is the way that I approach. That's not advice, that's just how I've always done it in the past. And you'll see me doing more of that. So I would have lost money on that one. The other one, the other short that I've got for the S&P is a structural short. It's the short looking for 2,500. It's the short looking for 2,000 or 2,100 at some point in the future. It's the short that would love to be joined by some selling at 2,700 or 2,800 or something like that, if that was the case. But for the moment, for this purposes of this video, we're still in that daily range. Now I've got 3 lows and 3 highs. So are we going to ratchet back up? Anyway, Dow Jones. similar sort of thing. Broke the range low, came back. If it goes tomorrow, it could be ugly. Nasdaq a little bit different. Not a new range low. Apple recovered quite substantially. It was down 2% at one point. But the Nasdaq's Jimmy R's cross, the S&P's Jimmy R's cross. That's on the weeklies. For us, we here in Australia, we got down to 55.21 yesterday. So a big move. A bounce back of 50 odd points. We're at 76 or thereabouts. Or 69, I should say, around where we basically closed. So a big 50-point bounce. Could we see it higher? Probably could, but we'll have to wait and see what happens, particularly with US futures, whether or not they kick off. The DAX obviously had a shocker and then bounced back with the US. For me, I look at that. I'm still, what I would say to you here is unless the DAX can get back up and through that fractal at about 11,000, notice how they're creeping lower. Then I wouldn't be too excited about a DAX rally right here and right now. Let's move to foreign exchange. Euro yesterday, you can't see because the range is getting tight, but that was a big reversal. We got up to 114.40 around there, I believe, and then we've come back down. Now, as I say, I thought we were going to get to like 115 or something like that so I could sell some. I put a tweet out to that effect, Paris burning, Macron losing, Salvani, blah, 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 all that sort of crap. But the ECJ came through with what I expected in terms of, you Poms, you can decide not to leave the EU if you'd like. But the sterling didn't get that lift because Theresa May decided not to hold the meaningful vote because she was going to lose. So this is a Prime Minister on the run. This is a government on the run. This is a bunch of politicians or a political class in the UK that has no idea. We could go, Macron on Twitter, good mate of mine from the US, we could easily go non-linear in the moves for the sterling, for the FTSE, and for the UK economy if they screw this up. So May's going to try and renegotiate, but you open a can of worms. Given what just happened in Paris, is Macron really going to leave the fishery question where it was? With what's happening in Europe, are the Spanish going to say, Gibraltar, don't worry about it? There's all these kind of issues that get opened up again. So we'll keep an eye on that. But for the moment, the euro, if we blow it up, we can draw a nice little trend line there that you can see. You can both the lows at the same time. So put that one there. And then if you're looking at the 4-hour trade, because obviously this will correlate with the 4-hour chart, you can draw that one there. And you'd say that if 113.40 breaks, euro might go lower. Dollar yen, a big fall on dollar yen yesterday, like a seriously big fall, but then a reversal as the US dollar caught a bid. The key thing here is that we're in this turgid little range for the dollar index, and we're in this tight little range for euro and others. But the key thing here is when you look around the planet and you go, heck, don't like the Fed's gonna pause. Don't like US. Let's go and buy something else. What'll I buy? Will I buy euro? Well, Macron's just going to make a turn like Salvini, and the EU or the European Commission is going to be belting Italy and France. So how's that going to work? And then where else we got? Japan. Well, gee whiz. Their GDP yesterday was negative 2.5%. Do I want to buy that? No, probably not. How about Australia? No, tied to China. Housing market bust. Not so good. Oh, what about the Chinese itself? Oh, did you see that trade data over the weekend? Well, that's not so good. Righto, what else have we got? Oh, emerging market. Oh, no, not emerging markets. So do you see? So that doesn't mean that the US dollar just goes straight up. But you can see how there's all these competing forces, backwards and forwards, and why the US dollar is kind of stuck in this range while everything else is stuck in this range. So for me, I've drawn a box in the market's morning piece. So I'm essentially saying 111.40 to 114.50, 70. It's 75 is the key level for me to keep an eye on. In terms of sterling, well, we've broken. So the call becomes 120 on the weekly basis. On a daily basis, excuse me, you would say that, that's probably sounding really loud, I apologise for that. It needs to hold yesterday's low, Monday's low. If it breaks down through Monday's low, then it will genuinely have a run lower. You could, if we look at that on the daily, so what do we got? We got 133 to 126. So that is 127. Let's call it 6. 24. So that'd be target would be 124 on a 138.2% retracement of that break there, something like that. So that would be your next kind of big target. 124 to 124 and a half would be where I would expect some support to pop in. In terms of the Aussie, pardon me, we can't quite see it, but that's an ugly candle. Pardon me. MACD still pointing lower. We had the big bearish engulfing on the weekly, obviously, last week. So the downside's there, but we haven't broken 7160 yet. So there's no point getting uber bearish unless 7160 breaks. If 7160 breaks, then I'm happy to get uber bearish. If 7160 doesn't break, then potentially we're mapping out the bottom of what could be a range. But my sense is it should break. Dollar CAD, haven't even looked at dollar CAD today, I was too busy. So dollar CAD's, well, that's the weekly, that doesn't help me. Yeah, that does though. So we're back up above the top of recent ranges. This is the level that we broke that we're supposed to run. Then we've come back in. We've retested that trend line. Can you believe that trend line has any relevance? You would think that it doesn't, but it does. As you can see there, it's bounced off it again. So let's just say we have not seen a decent pullback to this 131. So that's one of the reasons I left it there. So that's the move, right? So you get that down. It didn't exactly hit the 38.2, but it wasn't that far off. So that would say that a break above 133.60 should get us to 135.80 or thereabouts. We're not there yet, and we've got to take out 134.40 before we get there. But that trend line is an interesting one. The Kiwi is a little bit lower, but holding in there, holding above this trend line. You know, I think last week I said it had come back to 68.30 something. Well, it hasn't yet, and it may not. What do we got here? We've got the sorry, that's the stop and reverse. So 68.20 is about where the trend line is now. That's the key level. If it gets down and through there, it can go for a bit of a gallop. Interestingly, dollar yuan is pushing higher, as is dollar sing. Not out of the woods by any stretch of the imagination, the US dollar just yet. But we'll see what happens. So dollar sing at 137.37. It's up above the two moving averages, the 15 and the 30. That's actually quite positive for dollar sing. Keep an eye on that. If the US dollar continues to push on, you'll see it in dollar yuan and in dollar sing, and that will be really interesting and indicative. Now, yesterday I mentioned about the 200-day moving average. I got a couple of emails. Thank you for those. Why don't I use them just for my tool set, you know, my daily iterations, whether I'm writing or whether I am, you know, talking on the videos. The 200-day doesn't really achieve the goals that I'm looking for. It works really well on individual stocks, from what I believe. There's a fella called Larry Tintorelli on Twitter, although I think his account's locked. I follow him, he follows me. But you'll find a few podcasts that he's on. Have a look at Anthony Crudelli's podcast with Larry Tintorelli. So if you're interested in how you can actually use a 200-day moving average as a trading tool, then that works. But I tend to use the 15 and the 30s because that combined with, say, your MACD and your stochastics, to me, is a better combination than just wading backwards and forwards for the 200-day moving average. It just doesn't suit my style. There's nothing wrong with it. But with gold now, so we haven't got through it. Gold is the exception, of course. 1256, 57. If it gets through there, then it really runs. If it can't get through there, then it's struggling a little bit. So 1243 is support, and that was last night's low. Then we've got 1230.31 as support, but 1237, which is the low of the previous day. So that's where your support is, and your resistance, very much US dollar based. That gold really didn't kick on when stocks were really funky. Might tell you that gold is really as much about the US dollar as anything else. I think dips will be bought. Silver back in the middle of the range, so nothing exciting for us there. Now, copper, this is interesting. Copper is breaking low. Now, the money supply data out of China today for me is really interesting. I'm one of those people that believes inflation tells you a lot about aggregate demand in an economy. And I'm one of those people who believes that the credit pulse and money supply tells you about what's going on in the economy as well. So the money supply data for me for China is going to be interesting, particularly after that trade data and after the inflation data over the weekend. So if we get low volumes of growth, then we could see it lower. We've got a fractal there, 270. I think I mentioned that yesterday as a level to watch. That was last week's low. So 270, if it breaks down and through 270, then you'd say, heck, copper's going lower. Aussie will get dragged down. That would talk to some sort of concern about global growth or Chinese growth. So keep an eye on that one. In terms of WTI and Brent, well, the idea that they're going to go higher is not over yet. But gee whiz, it's a tenuous one. So the SAR is now up at $70 for that's not 70. I'm on the wrong one. Hang on. 50. I don't know where 70 came from. 50.25. So you'd say that if you break down through that low, then if you have a look at it on the weekly, you've got $10. Now, I wouldn't call it a $10 fall just yet, because part of the first ever McKenna system was that you got to move back at least through the 23.6, mostly to the between the 38.2 and the 50, and then it was that next move through the high or the low after that consolidation where things really got moving. So, a break here might be a false break, and then we might get a chance for that second turn in the MACD. Remember that I've said that often the first turn in the MACD after a big move is a false one. So, which, if you think about RSI and those kind of things, you end up with, it's called divergence. You end up with a lower, in this case, a lower low on the MACD, or in the RSI to be a lower low on the RSI, and then you draw the upslope and you say, heck, that's divergence, blah, 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 or something like that. Anyway, we got a new low, but we didn't get a new low in the RSI, that kind of thing. That's what I'm intimating. Pardon me. Same sort of story for Brent of where we are. We're consolidating in this range. We've got a 57, 76, 64, 59 range, and a similar kind of 0 to 23.6%. Pardon me, range for the for WTI. And last but not least, Bitcoin. Trying to stabilize, not really going anywhere. 3,500, 3,400. It's got to close below 3,400 for it to get bearish again. While it's above that, it's holding in. Righto, that's it from me. It's a fractious time. Stocks bounced, but they don't look strong. Sort of 26, 30 to 40 is not strong. 27, still not strong. That's only still 2,700 I made in the S&P. That's only still mid-range. So we'll keep an eye out. There are reasons to be positive about the China truce. The soybean story is good. The separation of Huawei from trade is good. If Apple is really just about Apple versus Qualcomm in a Chinese court, then that's not related. But you can see how all these things could easily get conflated to be together. So still lots and lots of things. House price index in Australia, NAB business survey as well, ZEW surveys for Germany and for Europe, UK employment, NFIB sentiment in the US, and then of course PPI. So still plenty of data out, and I'll be back tomorrow. Speak to you then.